Well, here's some crucial macroeconomic data. Inflation has accelerated marginally in August as food prices remain stubborn. The prices of cereals remain high. Even core inflation has ticked higher, with economists fearing it could hit 4% in the near term. On the other hand, industrial production picked up pace in July, growing at 4.8%. Latha Venkatesh is joining us now with more on inflation as well as the IIP data. Latha.
Well, on the face of it, it's a bit of a disappointment because the market was running with about 3.45 in terms of expectations. Our poll was 3.42, but the August inflation has come in at 3.65. In spite of the poll of around 3.45, 3.47, the market was expecting 3.3, that it will undershoot. Now, this is, an overshoot by about 20 basis points compared to the poll. So there will be a bit of a disappointment in the market, though the last word is always held by the US yields. At the moment, that 6.81 that the Indian 10-year was tending towards, we may see a rise in the yields. The other change because of the inflation number will be that widespread expectation that the Reserve Bank may change its stance in October. That expectation will recede a bit. Those are the key takeaways from the inflation number. But otherwise, this is a lower inflation number, 3.65%. The fly in the ointment is food inflation. It was expected to come in as low as 4.5%, but it's come in at 5.66. It's still lower than the 7-8% that we saw for the last 12 months or so, but still it's not fallen as much as expected. And within the food basket, cereals were expected to fall month on month. They've risen by 0.6% month on month. Year on year, of course, they're up by about 7.3%. Vegetables have fallen expectedly, but not fallen enough. So food inflation will continue to be a bit of a bother for the Reserve Bank and for economists tracking the inflation numbers. That's it on inflation. We will undershoot the Reserve Bank's second quarter number average of 4.4 because in the 2 months, July and August, it is 3.6 and 3.65. So we are certainly going to be less than the 4.4 that the Reserve Bank has forecast. But the important takeaway from today's from the CPI number is that it's a little higher than expected. Disappointment for the bond market. On the industrial output front, at 4.8, the number is good, better than expected. As well, CapEx has picked up. It's 12%. It has been low single digits in the first 3 months. The average was about 5%. So at 12%, this is clearly showing that during elections, the government did not spend much on CapEx. It's come back and spent in a big way. So there'll be an expectation that industrial output will do well in the months to come. The disappointment is consumer non-durables. That's down minus contraction of about 4%. So that will be a bit of a bother. That's the key takeaway from the industrial output number. Good number at the headline level, but consumption is still a bit of a worry. Those are the key takeaways from the IIP and the CPI numbers. Thank you for watching us on CNBC-TV18. For all news and updates, subscribe to our YouTube channel and watch us on all social media platforms.